This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Okay, and then to the hourly charts as we start the week, because again, there's not much sense looking at the long-term charts. We know what the long-term trend is. This week is all about the rodeo ride that we have here, hanging on for dear life, riding 2.7 seconds on a bull named Fu Manchu, right? Okay, here you go. Hourly chart going back 15 days. All right, this gets us all the way back to the early part of October. We had come crashing down, okay? Notice the line here. There's clearly something there at 1895. Whether it was on the 13th of October or it held its support on the 15th of October, came close on the 19th of October, bounced from that area on the 22nd, the 23rd, and the 25th, even the 26th. And now here we are, banging around that level today. Again, this is an hourly chart, so it shows you how often we're up there today. Like I said, I have a last of 1895, even 1896. There's a pretty clear trend line off those lows of last week. So if we fade somewhat overnight, maybe they hit us in London or in Asia or something like that. Watch this blue line. Let's see if we can stay above 1885, okay, on any pullback in the next 12 hours. But then as we go through the day tomorrow, okay, and look, there's just enough room tomorrow to put a whole bunch more candlesticks in there and stay below 1895. We may or may not, and that may not mean anything, okay? We're talking the hourly chart here. I'm kind of picking at it to try to find something that we can watch. I think this is it, 1895. And then, of course, obviously 19. You can look at that, too. There's a psychological. If we can get over 19, say we wrap up the COMEX and the Globex above 19 tomorrow, 1900, that would sure make tomorrow night interesting, now wouldn't it? I told you I was going to be buying a miner this week. I didn't want to fiddle around too much. I wanted to buy, conservative. I've got enough of these little itty-bitty ones that Eric's told me about. So I decided today to buy myself 100 shares of Agnico Eagle. I, of course, posted that trade in the member-only forums, Turds non-qualified fund account. Now, keeping in mind what I just showed you about the GDX and the GDXJ, and hoping that they're going to move higher, break their trend line, and get above the 50-day, look at Agnico Eagle. Okay, similar bounce of nearly 10% in the last 4 days, but it moved above its 50-day yesterday and tapped its trend line today. So I bought Agnico Eagle, 81 something. I bought it this morning, so I'm already up a little bit. Very curious to see what happens tomorrow if it tries to test its 50-day. Again, all this dependent upon what happens overnight. But now, save the best chart for last. I was going to buy Newmont. That was my first guess. Instead, I bought Agnico Eagle. Why? Because look at Newmont. And again, this is where I think the hope lies. Newmont and Barrick being the two biggest blue chip, if you will, gold miners. Barrick hasn't broken out yet, but Newmont has. Not only did it break its 50-day yesterday and then extend today, and it's now 15% off its lows, it also has broken its trend line. So let's work backward. Newmont, the blue chip, if you will, surging higher above its 50-day and above its trend line, looks great. Then you work back to Agnico Eagle. I bought it today because it hasn't yet done that. So I think, well, there's a little more upside here maybe. So I bought Agnico Eagle above its 50-day, but not yet above its trend line. And then you go back to GDX, not yet above the trend line, nor its 50-day. I think Newmont is leading the way. That's what I think. And I think this saved, like I said, I thought I'd save this chart for last because I thought it was kind of make you feel good, I think, if you look at it. The way I look at it, at least. First of all, the 10-year note yield. Does that look like a reversal to you? Again, overt, covert, yield curve control, whatever you want to call it. Why would the 10-year note rally this strong today? Everybody suddenly wants treasuries. Is it because the Fed? Is it because all word getting out what the Fed might be talking about at the FOMC meeting headed tomorrow? Maybe. Maybe that's what it is. All I know is I've seen some outside reversal, let's say, on the rate, because we'll call it a bearish engulfing candle for the rates. It'd be a bullish engulfing candle for the bonds themselves. That, baby, sure looks like a reversal to me. So, again, maybe we'll be allowed to have a better day tomorrow. We'll just have to see, but shows you a little bit about interest rates, that's for sure. Okay, and then here is the dollar index. Okay, I think we can say there's a little bit now of a little pennant there within, though, the range. And that range between 92 and 94, now for pretty soon to be approaching 4 months. Couple upside breakouts. Most recently, earlier this week, didn't happen. Got down below the 50-day today for a little while. Finished up just slightly above, at least last I looked. So we'll see where that goes with the FOMC tomorrow and with the BLSBS on Friday. And then, again, as we do with the metals, we're going to worry about the weekly charts. We're going to let all this intraday, intra-weeks noise sort itself out. The clear suppression and manipulation today. And we'll see how these things all look come Friday. Okay, so we've talked about gold breaking out, and I'll show you that chart in a minute. We talked about silver breaking out. We talked about Newmont and Agnico Eagle and what that meant for GDX and GDXJ. Okay, you want to know what hasn't broken out yet? The tip. Okay, the tip continued to rally in August, all the way into early September. Ooh, early September. What do we talk about? Just bought. This is like the dollar index. Lowest close since September the 1st. Well, look where the tip was on September the 1st. 127. Now, I don't know where you want to draw this trend line, but I think I drew it correctly. The tip needs to break out as well. If you think that the falling dollar is inflationary, then why wouldn't it? So what's going to happen to the gold price if the dollar just continues lower, but all of a sudden, real interest rates start plunging again? And the tip goes back to 126.50 or 127 where it was in early September. So we're going to watch this. 126 for now is the key level. That's only about a half point away. And in our Friday morning update for all TFMR members, we discuss the importance of the weekly close. For gold, something above 1927, though 1965 would be great. And in COMEX silver, anything really above 25, but specifically above the 50-day moving average that's around 25.20. We'll watch those levels all the way through the close. Thanks again for listening to the TFMR weekly highlights of the first week of November 2020. Please feel free to join us at TF Metals Report. A monthly subscription is just 50 cents a day or $15 a month. I think you'll like it. The community is a fantastic group of people from around the world and all political stripes. All of us trying to help each other navigate the storm brought about by the end of the great Keynesian experiment. Please check us out. TFMetalsReport.com.